Welcome to the Daily Update Podcast, where I'll go through the action in the market for Monday, August 4th, and we'll see how things look for Tuesday, August 5th. On Monday, the S&P 500 staged a solid rebound, climbing 1.47% and almost recovering from Friday's losses. While the gain didn't fully offset the prior decline, it was enough to push the index back above its 20-period moving average, signaling a positive short-term trend, as well as positive trends across the intermediate and long term. The session kicked off with a gap higher, fueled by strong futures and positive momentum from European markets. The index cleared two key resistance levels, R1 at 62.79 and R2 at 63.21, with no significant midday selling pressure. Short covering also played a role, helping the market close near its intraday high. However, not all signals were bullish. Volume was below average, creating a negative divergence compared to last week's typical above-average volume. Looking at the technicals and sector performance, the parabolic SAR remains negative, and several momentum oscillators, including the PMO, are showing extreme positive readings, but with concerning negative divergences and dropping below their moving averages and declining. The VIX, which had been above 20 after Friday, dropped back to 17.52, settling back within its recent range. This suggests reduced volatility for now, though seasonal trends point to a potential uptick in the VIX as August progresses. On the sector front, growth stocks outperformed value, while small and mid-cap stocks regained some ground. Tech and communication led the charge, but energy was the lone laggard, weighed down by OPEC's decision to increase output starting in September. Turning to the broader economic picture, interest rates continue to trend lower, with the 10-year Treasury yield now at 4.2%. This decline may reflect a weakening economy rather than a flight to safety, and market expectations are growing for a Fed cut in September. Monday's economic data showed factory orders falling 4.8% month over month, slightly better than the expected 5.1% drop, though results were mixed when excluding transportation. Sentiment also improved. The sentiment index rose to 57 from 50 and is now back to positive, and trend indicators, including the ADX, now is seeing the green line cross back above the red line, both on the short and intermediate term chart. However, both the short and intermediate term trend are weakening as they continue to decline below their moving average. Warning signs and positive indicators? As we assess the market's health, there are both positives and negatives to consider. On the positive side, growth-to-value ratios remain robust. The Vortex indicator is positive. The S&P 500 also recaptured key moving averages and filled a gap from Friday's decline. On the negative side, negative divergences in momentum oscillators, below average volume on Monday, and a negative parabolic SAR are raising red flags. Additionally, the financial sector continues to underperform the broader S&P 500, and insider buying has notably dried up. The bullish percent index did advance, but is still negative overall. Looking ahead to Tuesday, August 5th, investors should keep an eye on key reports, including the ISM Services Index and the trade balance. Potential geopolitical or trade-related developments could also move the markets, especially with an adjusted trade deadline looming on August 7th. Seasonally, August 5th is neutral to positive across all indexes, but historical data for post-election years suggest August can be a weak month, often peaking around this time. The big question for the S&P 500 is whether Monday's bounce marks the start of a sustained move higher or a potential trap before further declines. Negative divergences suggest caution, but the market has shown resilience in overcoming such signals in the past. In conclusion, the S&P 500 is currently positive across all time frames, but signs of a weakening trend are emerging. Investors should closely monitor upcoming economic data, trade developments, and technical indicators to determine whether this rebound has legs or if weakness will resume. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.